Hey all, welcome to ShareTreck. This is Raj here. Friends, I'm doing something after a very long time that is a relatively good financial analysis of two companies that I have been thinking about. One is Microsoft and the other is Google. They are part of our AI watch list. And I have been thinking about Google as being good for the short term to get price increase because I think it's valued less than the Mag 6. And I have been thinking that Microsoft is a long-term strong contender. But I thought that let us go and have a deeper look today and do a fundamental analysis. So this is my attempt at it. So please check out the whole thing. I have made a PowerPoint deck which I can upload on the website, sharetrek.com website, if you guys want to take a copy of that. So this is going to involve not only the financial ratios, but also it's going to talk qualitatively about what is better about Microsoft and what's better about Google and vice versa. So please watch it till the end. Let's get started. Welcome back, friends. So this is basically a comparison of Microsoft and Google. And what I have done is I have taken data as of 8th of February 2024. And not only am I comparing financials, but I'm also comparing other attributes that are not found in the financial statements, but are very important for the performance because those are the ones that translate and express themselves as the numbers and the profitability and the durability of the enterprise. So first of all, if you look at earnings, the latest earnings time to market was taken from Yahoo Finance. So if the Yahoo Finance number is wrong, then my analysis is likely to be wrong. So I'm going to assume that Yahoo Finance is correct. And what I'm getting is a diluted EPS of 10.32 for Microsoft and current share price to time to market earnings ratio of 40.04. And when you look at Google, we have the latest diluted EPS at $5.80 and their current share price to TTM earnings ratio at 25.41. So you get more out of Google as compared to Microsoft. So there is a built-in premium here for Microsoft in my opinion. And I will also say that when you look at the profitability aspect, net profit margin for Microsoft is 20.19, whereas for Google it is 18.75. And return on equity is 39.06 for Microsoft and 26.03 for Google. So in both cases, like Microsoft is doing better. And if you look at current ratio, Microsoft is 1.77 and Google is 2.10. And in the quick ratio department also, the same advantage remains. In this case, Google seems to be better than Microsoft in case of both current ratio as well as quick ratio. Next, let us look at their efficiency. Inventory turnover ratio for Microsoft is 5.25 and for Google is uncalculable because I couldn't find the numbers. And Google doesn't generally have inventory, so that's the other problem. Microsoft has got hardware stuff which are all inventory. And days sales outstanding, so for Microsoft it is 55.23 days, and for Google it happens to be 45.45 days. And Microsoft has a notable inventory turnover, but Google outperforms overall in the days sale outstanding. So that's the way I look at these ratios. And in terms of comparative valuation, if you look at the P by E ratio or price to earnings ratio, Microsoft is at 28.19, whereas Google happens to be at 20.24. So from a valuation perspective, Google appears to be more attractively valued, and that should kind of give a lot of, I would say, strong reasons why one should invest in Google at this point of time, because assuming that Microsoft has found its value, Google has ways to go before it can find the same multiples. So that's the way I would look at it. And this kind of validates my feeling that Google has got more runway to go before it reaches its peak, whereas Microsoft has already reached at a higher level. So that's the way I'm looking at it right now. So just looking at the financial parameters don't seem to cut it totally. So let us look at the qualitative aspects and non-financial aspects that kind of boost or reduce the value of companies. Let's start off with cloud services and infrastructure. When you look at Microsoft with their Azure, which has a strong presence in enterprise cloud services, and compare it to Google, which is more known for data analytics and machine learning capabilities, you see a differentiation there, and they have a different set of a different segment that they are looking at. And if you look at productivity software and collaboration tool, Microsoft Office and Teams are something that Microsoft actually sells subscriptions, and they got recurring annual revenue, and they are dominant in the productivity software section, whereas Google has got the G Suite as well as Google Meet, and it emphasizes more of real-time collaboration. And when it comes to search and advertising, I think Microsoft wins hands down. Microsoft Bing competes in search but has a smaller market share, whereas Google has got search and AdWords, and it's dominant in search and online advertising. And when it comes to operating system, Microsoft Windows is widely used operating system on all desktops, whereas Google's Android and Chrome OS is dominant in mobile, lightweight kind of computing. So those are two separate segments. And if you look at AI and machine learning, Microsoft invests in AI research and provides AI services on Azure, whereas Google is renowned for advancement in AI and machine language learning. And if you look at the market focus, Microsoft has got strong focus on enterprise solutions and business applications, whereas Google is known for consumer-focused products and cloud services. And as in terms of revenue streams, Microsoft has diverse revenue streams, including software licensing, cloud services, and hardware. In case of Google, it mainly relies on advertising revenue with additional income from cloud services. And of course, you have cultural differences. Microsoft is traditionally known for enterprise focus and software licensing. Google emphasizes more on innovation, casual work culture, and consumer services. So they look very different beasts altogether. And based on the provided data and differentiation factors, I think investors should consider carefully their investment goals and risk tolerance. While Microsoft demonstrates a higher share price to earnings ratio, indicating potentially higher valuation at present, Google is valued much lower. Other factors such as cloud service strength, product focus, and cultural differences should also be considered. And investors should conduct further research and consider additional factors such as industry trends, management performance, and future growth prospects before making investment decisions. Now, what I have said here in my analysis so far is just skin deep analysis. When it comes to giants like Microsoft and Google that are at the cutting edge of technology and as well have been providing legacy software offerings for a long period of time, it's difficult to do a deep dive as a retail investor because we have limited time, we have limited capability and limited intellect. Like we don't have an army of analysts who can drill deep into various aspects of a company. For example, I wanted to compare the relative merits of AI and cloud for Google as well as Microsoft. And the very first parameter I saw made me realize that it will be difficult for me to do such kind of an analysis. For example, I compared their proprietary hardware for cloud and AI. So Google seems to have something called as TPU or Tensor Processing Unit, and the equivalent for that in Microsoft is FPGA or Field Programmable Gate Array. So here is a comparison of Google's TPU and Microsoft's FPGA. So if you look at the Google TPU, it's custom built hardware designed specifically for accelerating machine learning workloads and optimized for processing and executing operations related to deep learning tasks. Whereas Microsoft's FPGA is a reconfigurable hardware device that allows user to program its logic circuits after manufacturing. And it's used for a broader range of applications, including but not limited to machine learning, networking, and signal processing. And in terms of flexibility, Google's TPU is designed with a focus on accelerating specific machine learning tasks, providing high performance for those workloads, and less flexible in terms of adaptability to various applications outside of machine learning. Whereas Microsoft FPGA offers flexibility as users can reprogram the logic circuits to suit different tasks, suitable for a diverse set of applications beyond machine learning, enabling adaptability to evolving needs, and that makes it a little bit more versatile. If you look at performance, Google's TPU is optimized for machine learning tasks, delivering high performance in terms of throughput and speed for deep learning models, whereas FPGA may not be as specialized for machine learning as TPU, but its reconfigurability allows for optimizations in various applications, providing competitive performance. And when you go and have a look at the use cases, Google's TPU is mainly utilized in Google Cloud for enhancing the performance of machine learning and machine learning models and applications, whereas FPGA is deployed in Azure cloud services and data centers for a range of applications, including networking, data processing, and machine learning. And the Google's TPU is primarily available in Google Cloud Platform as a specialized hardware option for a machine learning task, whereas Microsoft FPGA is integrated into Azure Cloud Services, allowing users to leverage FPGA capabilities for diverse application in a cloud environment. So in conclusion, if you look at just this parameter, Google's TPU is a specialized hardware accelerator designed explicitly for machine learning tasks, whereas Microsoft FPGA offers more flexibility, enabling users to adapt the hardware for a broad range of applications beyond machine learning. The choice between TPU and FPU then depends on the specific needs and use cases for the applications being developed or deployed. So as a retail investor, when I look at all of these things, I think that if machine learning is going to be the biggest use case of the future, I think Google is hands down winner. But if flexibility and reconfigurability is going to be the criterion for the biggest use cases in future, then Microsoft is a winner and Google has to catch up with something that is reconfigurable. So that's how it looks like. And there are so many other parameters like this. I mean, it's like a rabbit hole. You keep on digging and you keep on going deeper and deeper. And then I come to my main thesis. I believe after so many years in the market, I believe that if you do all the things, you jump through all the hoops and get the valuation for a company, it's useful for you because when you're buying the share, you know what it's actually worth, and then you're still buying it with your eyes open. From that perspective, it helps you to quantify the risk if the market price is above the valuation. And if the market price is below the valuation, it allows you to tap into profitability. That's where value investing comes in. So that's the utility of doing valuation exercise. And this is my attempt to do a comparative valuation exercise between Microsoft and Google. And I'm going to have both of them in my portfolio, as I mentioned earlier. For Google, I think I would like to buy a few more Google. And for Microsoft, I think I would look at putting some covered calls whenever possible to guard on the downside. So that, my friends, brings me to an end of this video. I hope you enjoyed this. Please let me know if you found it interesting and if you want me to do more of these, because we have a whole bunch of AI companies that I would like to evaluate. And I think if you guys are interested in it, then I can make a video of my evaluation so that you can also get benefit from it. And also please put your suggestions in the comment section for any improvement that you can see in this. So with that said, my friends, I would like to bring this video to an end. Thanks and have a great day. Bye for now.